Good evening. Welcome to Ottawa Experts. I'm your host, Barbara Balfour. Well, if financial freedom is part of your game plan, you'll want to stick around to watch the show tonight. We're talking all about investing, how to pick the right stocks, and how to grow your personal wealth, even if you don't have much money to play with just yet. I'm delighted to introduce our guests tonight, two very seasoned professionals in investment who have mastered the art of money management. First, we have Rick Decosta, president of FinanciallyIndependentTraders.com. It's an online community that helps investors develop the necessary skills to achieve financial independence. Rick has a leadership career spanning 16 years in the hospitality and financial sectors. Today, he helps educate and mentor aspiring stock market traders at all levels. Welcome to the show.
Yes, thank you for having me.
Next, it's my pleasure to introduce Nancy Graham. She's a portfolio manager at PWL Capital. Nancy joined the independent wealth management firm 18 years ago. She provides transparent advice to help clients navigate their way through choices that could potentially affect their bottom line. She's also the host of a popular YouTube series, and I just love the title. It's called No Dumb Questions. Thank you so much for joining us, Nancy.
It's a pleasure to be here.
Now, you're also giving away a few books to our viewers tonight. Maybe we can pull up the image of the books. Tell us a little bit about what you are giving away. We can see them on the screen here.
So the very first book is called Protect Your Purse. It's authored by Doris Belland, who is the founder of Financial Launchpad, and I endorse Doris's work. She's teaching financial literacy to women, and that's a great book that tells a story that inspires you to want to do it. A lot of people want to invest like Warren Buffett, so here's Playing the Winner's Game. Think, act, and invest like Warren Buffett, and you will probably be surprised when you read the contents, because we're going to talk about that tonight.
Perfect.
The Investment Answer is written by someone who was a trader on Wall Street, who after he retired found a different way to invest and writes about it, which is consistent with what we're doing. And Behavior Gap is a great book of images and stories about how your emotions play into your investment decisions.
I love that, Nancy. Thank you so much for giving those away. So if you want a chance at winning those books, all you have to do is go to our Facebook page. You have to like the show and comment below on which books you would like to win. We'll do a draw at the end of the week, and if you're the lucky winner, all you have to do is come down to the studio to pick them up at 475 Richmond Road. I'd also like to remind you that, as always, we're excited to hear from you. We welcome your questions. Please join the conversation and give us a call at 613-728-1001. We're excited to hear from you. Now, Rick, Nancy, I wanted to ask you both, how did you get into this line of work, and were you always so financially responsible? Rick, let's start with you.
Well, I would say not always financially responsible, and this is why I took this journey. I started my career in hospitality, so I had a leadership career in hospitality.
In hotels?
In hotels, yeah. So I was working for Starwood Hotels at the time, and BMO, Bank of Montreal, was looking to bring on customer service specialists to really change the culture in the banking industry, because TD had really taken customer service up to the next level. So they were looking for individuals such as myself. I found that it was a great opportunity at the time, so I took the journey. I took the big leap, moving from hospitality with no banking experience and transitioning over there. And throughout my years working for BMO, I spent about 7 years there. I was really learning about the stock market, even though it wasn't my primary field. It attracted me. You know, there's a little, movies like the Wolf of Wall Street, and
I remember that.
Yes.
Yeah.
So it really attracted me there. So I spent a lot of time learning, and then I actually found myself doing very well in the stock market, to the point where, before I decided to leave BMO, I realized that, hey, I'm making more money in the stock market right now, so there's a great opportunity here. So I took that leap and I took that journey to go off on my own as a day trader. While I did that as a day trader, I realized that I missed the team feel, I missed the community feel, and that's why I started FI Traders, fittraders.com.
And I want to hear more about this community, but Nancy, tell us about how you got into this line of work.
I would say, first of all, I grew up in a family business. I grew up on a grain farm, and it was always all about how the business worked. And from there, I went into the CA program. I went on to do a tax specialty there. And I kind of wound up in financial planning with people trying to make decisions about selling businesses. Do I retire? Does my pension make it work? Kind of where I wound up in the professional CA firm environment. And eventually, I wound up at PWL because I was looking to work on the implementation side rather than just the advice side. So here, people would say to me, well, I love it, now will you do it? And I couldn't do it. So here is the actual industry where we can do it, and PWL was a great match for values for me, because we believe in transparency, and we believe in giving clear reporting, and we believe in helping people work their way towards their goals. So that was the transition.
One of the messages we want to convey in the show tonight is that investing can be for everyone, and that it's okay to make mistakes, and that they're even expected along the way. And so with that in mind, I'd like to ask you, Rick, what was the biggest investment mistake you ever made?
Well, thinking that the stock market's always going to go up. So I remember at one point, it was the best trade I ever made, and the stock was continuously going up and up and up. And I was actually on my way to the Bay to buy a suit, and they had a sale, $199 for Calvin Klein suits. I was like, I got to get this deal before I go into work, and I'm just watching the stock go up. And all of a sudden, I'm standing outside the Bay, and I'm looking at my phone, and I'm watching the stock absolutely collapse. And I said, well, I need to understand and learn why that happened, and never let it happen again.
So did you buy the suit?
I didn't buy the suit. I was rushing back to work to get to a computer and figure out what I'm going to do with my investment.
Nancy, do you remember where you were during the dot-com crash of 2000?
Yeah, actually, I had just joined PWL. And my biggest investment mistake was avoided, because as an accountant, that was not my specialty, working in the investment sphere. I had lots of other planning and tax and all kinds of other experience. So when I came in to do those services in the firm, that's where I started, I had this messy portfolio. And I was rescued by PWL because I transferred my assets in, and they fixed it before it got blown up in the dot-com. So
very fortuitous.
I'll be honest, it wasn't because I was smart, it was because they did it for me. And subsequently, 18 years later, I figured it out. So
Let's talk about investing. Why should anyone invest, and who should invest? What do you think, Rick?
I think everyone should invest, but I would always recommend before they do invest to understand a couple facets of investing, whether it's the fundamental analysis side of it or the technical analysis side of it. If you understand both, it's great. I like to tell people fundamental analysis tells you what stocks to buy. Technical analysis will tell you when to buy them, and most importantly, when to sell them. So everyone should invest. It's a great opportunity to grow your wealth, but you should really understand a little bit about that side of investing. Understand about the stock market before putting your money into it.
Nancy, I imagine you get clients of all levels, all walks of life, all backgrounds. Where do you recommend that they start?
Well, I guess there's sort of two facets to this. Sometimes people want to invest before really there's sort of a progression in my mind, and in the mind of most people who do financial planning work. There's a progression of what you need to do to get to that point where you complete your education, you get your debts kind of under control, you get a reserve fund. I mean, these are all very conservative things, but they are things that work for people and take a lot of the worry out of this. And then they start to build their investments after that point. I'm not a believer in leveraged investing. I'm painting myself as the conservative woman and advisor that I am.
And so for our viewers who don't have much background, what is leveraged investing?
Borrowing to invest. I'm not a believer in borrowing to invest. If you do that, you have to have a really high risk tolerance, and just the people that are attracted to work with me generally are not of that mindset.
So if you have a high risk tolerance, you're probably someone who enjoys skydiving for fun?
Yeah.
Or day trading.
Or day trading.
Like we do.
Yeah. I was going to say that.
Yeah. We do attract a lot of people that would like to leverage their home or leverage a line of credit to participate in the stock market. So, most people that get into day trading do have a high risk tolerance, and they want to manage it themselves.
I want to hear more about that, but we have a caller on the line first. Alexa, are you with us?
Hi.
Hi, thank you so much for calling. Did you have a question for our guest?
Yeah, my question is actually in regards to investing in real estate in Ottawa. So my parents tend to invest in a lot of property, and they want me to follow their footsteps. But I feel that as a young person living in Ottawa, that maybe investing in real estate is not a good idea. What's the take on that? Do you think that would be a good decision for me down maybe 10 years, or maybe I should invest my money in something else?
What do you think, Nancy?
So anytime we invest in real estate, we're investing in a single property in a single market. So when we think about investing, we're founded in academic research about where investment returns come from around the world. And the best way to invest and the most productive way to invest is to be highly diversified. When you buy a single investment property in a single market, it doesn't do that for you. Having said that, real estate has turned out to be a good investment, but when we go back and look at the stats, really not that much better than a stock portfolio.
Interesting.
So you have to decide if you are a real estate investor because you feel comfortable. Like, there are people, when markets are difficult, they really want to reach out and touch that piece of real estate, and they feel much better there than in a stock portfolio or a stock and bond portfolio, in which case that could be the right choice for them, because a lot of what we're talking about is behavior driven investing. So I don't think it's a bad thing, but make sure you've got enough solvency, cash flow, maybe parental backup if you need it, to get started in a way that you can feel you're going to be able to pay that property off.
So, Rick, do you think it would be a good idea to play the stock market as a means of amassing that down payment for a home?
A lot of people look at a home as an asset, but if you don't have other funds to actively grow your wealth, the home is really just a liability. It's not generating income for you. You're speculating that over time the home is going to generate income, as we've seen every 10 years home prices have increased. The stock market is where you can have an opportunity to grow your wealth a little bit faster, as long as you know what you're doing, buying
and
at the right time.
that's the key, isn't
yes,
it?
Absolutely, because a lot of people, they hear from a friend, they hear from a family member, you should buy this investment, it's going up, and that's their first experience getting into the stock market. Someone told them to buy something, and then they didn't have the experience, they didn't have the understanding of what they were buying, and then there's a correction, and now they are down. So it is a great opportunity to grow your wealth, as long as you understand the risks and do some homework before you get in.
Nancy, you and I are both from out west, but this applies more to my hometown province of Alberta, where we have all seen what's happened to property values tumbling down compared to 10 or even 5 years ago. I think there's this conception that real estate is generally a safe investment, maybe safer than the stock market. And I know you are more risk averse. What would your advice be to clients like our caller tonight?
So I would say, I'm painting this conservative picture. You need to take on risk. You need to get comfortable with the kind of risk you're taking on to enable yourself to grow your wealth. So when we think about real estate, you have to be prepared for the fact that real estate cycles are very long. They can be 5, 10, 15 years before you get the hot market Ottawa's got right now.
So real estate is for the long-term investor.
And it's also a one-time sale, a one-time buy and a one-time sale. You go into something that's more liquid, like all the little units of the stocks that you're buying. You can buy and sell some of those as you need liquidity. You don't have to make all your decisions in one moment in one market.
I want to hear more about that. We're just going to break. When we come back, we'll delve into the hows of investing and some of the common jargon you might have heard. We'll demystify all of that for you. Don't go away. We'll be right back after the break. Hi, welcome back to Ottawa Experts. I'm your host, Barbara Balfour. On tonight's show, we're in studio with special guests Rick Decosta and Nancy Gray. We're talking about how we can get you on the road to investing in no time, even if you don't have much money to play with. You don't have to be Warren Buffett to be an investor. So I'd like to hear from you, Nancy. What does a successful investment strategy look like for your clients?
So when we look at stock markets around the world, we're looking at a massive, what we call pricing machine. People are buying and selling. $600 billion of stocks trade every day. That's with a B. So what we're saying is all of those advisors, all of those traders, all of those portfolio managers have information about those stocks. And all of those pieces of information, millions of pieces of information, are put into those prices. And they set a price. And when there's a new piece of information, then the price changes one way or the other. So what we're talking about really is efficient markets, which is a big academic concept, but it's a real thing.
What's an efficient market?
It means that the market is efficient at integrating information into setting a price. So if Apple's price sale of phones is declining, the price, as soon as that piece of information comes out, you would typically see the price of Apple drop.
So the response is almost immediate.
It's instantaneous practically. So what we're saying is the market does a pretty good job of integrating all that information. You think about $600 billion of stocks trading every day, and so it's very hard to outperform that. And when you look at the academic research done over 50 years, all markets around the world, it's proven to be very, very difficult for somebody, anyone, any brilliant, well-funded, well-researched organization to consistently outperform that market. So what we're saying is buy the market, which now is a very simple thing to do. You buy what's called index funds, and they buy all of the stocks in, say, the Standard & Poor's 500, which is the big U.S. index. So it's all the big U.S. companies in a single trade.
So how do you go about doing that?
You can go on Questrade or anybody's direct online stock trading, your own self-directed RSP. You could buy it there. You just go on and buy. You've
so
got.
You don't need a manager.
No, you don't need anybody to do this. That's the beauty of the index fund is you can buy. Our portfolios have about 8,000 different stocks around the world.
Now, what's a portfolio?
So that's your basket. That's your wealth. That's the money that's invested in the market. It's called a portfolio. It's usually got stocks and bonds in it in some proportion to how comfortable you are with risk. Okay, you're willing to take more risk, you're going to have more stocks. Less risk, you're going to have more bonds. So these portfolios will own thousands and thousands of stocks all over the world because we're taking advantage of all that intellectual property. It's really buying capitalism.
Rick, I'm beginning to appreciate how much your nerves must be made out of steel to do what you do. But before we get to that, we have a caller on the line. Eve, are you with us?
I am.
Hi, Eve. Thank you so much for watching. Did you have a question?
I do. I'm totally green about all of this, and I'm just wondering, what would you recommend as a minimum investment to get started and get a portfolio put together?
Rick?
I would say think about how much you're willing to lose. A lot of people enter the stock market, whether it's through an ETF, like
what's an ETF? Exchange traded fund, like what Nancy was talking about, and they don't want to lose 1-2%, or there's people that have a lot of risk, a high risk tolerance, and they're going to put $10,000 into the market, and they say, if I lose 2,000, I'll be fine. The second they lose 2,000, they start to panic. So really, it all depends on your risk tolerance. If you're okay to see a 20% drawdown on your account, and you're okay with that, then that's fine. Just make sure you're not overextending yourself, you're not putting more money into the market than you're willing to lose. So, what if you are not very risk tolerant at all? Could you start with $100? Could you invest in some penny stocks?
There are minimums that, if you want to buy a mutual fund or an ETF, there's going to be minimums that you could, that you need to put in to participate. I believe it's 500,000. Some of them vary. Into a stock, if you just want to buy an individual security, like what I do when we're day trading, it's going to cost you $9.95 to buy the stock through Questrade or through TD, whoever you're using. It's going to cost you $9.95 to sell it. If you are putting $100 into the stock, you have to consider that you've already lost 10%. So if you put in $100, you've already given away $9.95. You've already lost 10%.
Are fees always associated with these transactions, or is there a way to escape them?
There's always fees, no matter what. When you're dealing with self-directed brokerage, there's Questrade. It's the fees are like $4.95, but then they charge you ECN fees. There's always going to be a fee. So you got to make sure when you're putting money into the market, you're looking to see that it's going to grow. And if it's not going to grow and you're going to see a drawdown, don't put in more money than you're willing to lose.
Now, Nancy, if you have clients who are just starting out, or maybe someone who's retired, someone who doesn't have a big source of income and doesn't have much to play with, what would you advise them? How much would you suggest to them to play with?
So, first of all, the lady that's called in talks about being green and wanting to get started. One of the places she might want to look is the robo-advisor industry, because they do provide a pretty user-friendly interface. If you were to Google, I think it's called Young and, I can give it to Barbara after, but there is, if you go on and Google robo-advisors, I know the Globe and Mail did it in 2017, they did a review of them, and there's another Young and Talented or something, and they recently did a whole summary of robo-advisors. But anyway, there's about 8 or 9 of them in Canada, and they're excellent to help you get started.
What is a robo-advisor? Is it basically like a robot?
It's interface. It's totally an interface on a computer. What you want is a robo-advisor that has a full selection of different portfolios, which they all do. You fill out a little form online. You say, okay, that gives you a portfolio they recommend, aggressive, moderate, conservative, and you put your money in, they invest it, and they keep it, and they keep as markets move, they make sure you stay, say, to your 50-50 balance of stocks and bonds, and they do it for probably about 1/2%. So that's a very low cost of fees we were talking about, and you can watch it online, and you you pick the ETFs in the background, and I couldn't tell you right now which company does, but most of them are passively managed, in other words, broad indexes, and you just keep adding to that, and it will report back to you your performance. It'll show you market performance. It's a great way to get started at a modest level and also test what Rick's talking about. Now, I would suggest that in our world, we would change the language around this. We invest money. We don't talk about playing with money because we're trying to help our clients get to a successful accumulation of wealth and retirement protection of wealth, legacy purposes, whatever it is. And I have clients who've started with very modest amounts of money. It's very important to know you need to be a good accumulator. You need to be able to control that earning spending thing to have money to save, because the markets are never going to make up for the fact that you aren't saving.
You have to be disciplined.
It has to be both.
I'm curious to know whether the need for a face-to-face human relationship for someone to hold your hand when the markets are plummeting, if that comes into play for people who use robo-advisories. But first, I want to get to our caller, Shannon, who is on the line. Are you with us?
I am, yeah.
Thanks so much for watching. Did you have a question for our guests?
Actually, I did have a question very similar to what you were just referring to, Barbara. For somebody who's brand new and you're, not really familiar with the stock market and that sort of thing, I'm just wondering if the guests would recommend any specific face-to-face meetings, or if they would recommend specific books or websites, just to kind of become familiar with the language so that I know what I'm doing before I actually invest.
What are some great resources?
Yeah, this is exactly why I created Fit Traders, fitraders.com. The reason for that was because a lot of people get into the stock market and they're not sure what they're looking at. They're just putting money, they have no idea what's going to happen. Our community, we have traders across the country. So we have a trader from every province except Quebec. So we come together and we share our experiences and we share what we're looking for, and it helps people grow exponentially. You grow a lot faster when you learn from other people's experience. Also, YouTube is a great place to learn. I put out educational videos on YouTube, and there's tons of content there, so you can really learn. TradingView.com allows you to do paper trading. So paper trading means you don't need to put any money into the market, but you can pretend that you did and really measure how your performance is going over time. So really spend time, get a mentor. Everybody, you get a mentor for your health, you get a mentor for your wellness. Maybe you have a mentor in your career. If you want to invest in the stock market, you want to put your money out there, I suggest getting a mentor that's going to walk you through it.
And of course, in terms of resources, Nancy, you're giving away those 4 great books tonight, so that's probably a good place to start. Again, if you want a chance at winning those books, make sure you comment and like our Facebook, and we'll do a draw at the end of the week and contact you if you're the lucky winner. We have another caller on the line. Anne, are you with us?
Hi, yes, I am.
Hi, did you have a question for us?
I do. I've wanted to learn more about investing for a long time, and I've always been intimidated by it because of the vast amount of information out there. My question is, where would you suggest that someone who's brand new getting started? Because there's so many things, right from cryptocurrencies to Bitcoin to differentiating where to start. Do you have any wisdom on where is the gal to start?
Nancy.
I would love to take this question. Okay, first of all, on our website at PWL Capital, we do a lot of writing, blogging, there's podcasts, there's YouTube series. There's like 4 or 5 of us doing YouTube series, so the No Dumb Questions is one of them. There's a woman named Susan Daly in our office in Waterloo. It's called Your Money, Your Choices, and she starts with, what's a tax-free savings account? And even in my series, there's what's a stock, what's a bond. So there's lots and lots of sort of 4, 5, 6, 7-minute video clips that we've tried to make user-friendly. So in my case, your hands are going and they're doing animation in the background to make it sort of edutainment. The other thing is, and with all due respect for where we are right now, please try to avoid acting on information that's in the media. It is news, it is information, but it is but it's junk food for your financial health. It's interesting, but it's not going to guide you to a good investment strategy. So can we bring up the fear and greed image?
You sent us an image earlier today with fear and greed. We could bring that up on the screen so we can talk about that. And what was the image about?
The idea behind the image is what happens to people when markets rise and the markets decline.
There it is.
So what you can see here, this is, I give credit to Behavior Gap, who created this. He's an advisor. He did this on a napkin, talking to a client one day, and it kicked off a whole career of images. What we're seeing is the prices in the market. On the way up, we see people wanting to buy in. We've had 10 years of good markets. So kind of rising tides float all boats. And unfortunately, the nasty word is greed. Then as markets come down, people get fearful and they sell. Then they do it again. And part of what drives that is listening to all the news reports about all the things that are going on, good or bad.
And I want to hear more about the emotions behind investing and how they govern the markets, but we're just about to go to break, so don't go away. We'll be right back after the break. Hi, welcome back to Ottawa Experts. I'm your host, Barbara Balfour, and on tonight's show we're talking about investment and building your personal wealth. Even if you don't have a lot to start with, that's okay. You don't have to be Bill Gates or Warren Buffett to invest. We are joined in the studio with special guests Rick Decosta and Nancy Graham. But first, we have a caller on the line. Octavia, are you with us?
Hi, yes I am.
Hi, thank you so much for calling. Did you have a question?
I do. I was wondering, like, as a single mom on, pretty low income, what would be a practical way that I could invest some money in a stock market?
Now, I know, Nancy, you're a big fan of the index.
I am. And you would probably want to consider using an RSP or a tax-free savings account so that if you have taxes to pay, you get a little bit of a benefit on that. And yeah, I would buy a broad index.
And what's a tax-free savings account? How does it work?
So a tax-free savings account is really just a title. Why they call it a savings account, I don't know, because it doesn't really work like a savings account. It's a title set up by the Department of Finance to allow you to put money in that you've already paid tax on into an account and invest. And let's say that money goes up in value. When you bring the money out, you don't pay any tax on it.
You don't pay any tax on the income that you've earned?
On the gains, that's right.
Okay, thank you so much for joining us, Octavia. I want to go back to a discussion that we had earlier, Rick, about your nerves of steel. And what do you do to prepare yourself for the fluctuations in the market? How do you educate yourself? Where do you go to do your research?
Yeah, this is where we spend a lot of our time. So in our community, I could teach anybody the charts, technical analysis. When you look at a chart, it looks very confusing. If you've never seen one before, I can break it down, and it's actually quite simple. That's the easiest part of trading. I do a 2-day course. I teach people. They leave there. They understand the chart. They're ready to go. They're ready to go to work Monday. The stock market opens. The emotion takes over. Fear, greed, hope, regret. You're going to deal with all four of those emotions. The key is to learn from your experiences and to learn, what did you do wrong? So, stock goes up, you bought at $8, it goes up to 10, you sell, you're happy, you made some money, now you look back and the stock's at 15, you have so much regret that you should have held. You have to learn from these experiences. Our job, as to Nancy's point, is that the markets are efficient. As day traders, we're trying to beat the market. We're trying to say, if the market's gonna go up 20%, it's going to fluctuate on its way up to 20%. Let's try and get 30% out of it. Let's try and get 25% of it. The only way to do that is to really have strong discipline, strong trading plans, and really understanding that you cannot time the market perfectly. Our job is just to try and extract some gains out of the market.
I think everyone who plays the stock market, is sort of jostling to find, the best tips, the best fail-safe industries, or the best stocks to invest in. Where are some good places for research? Like, for example, do analysts at major financial institutions typically issue reports that say, you should buy this stock or you should avoid this stock? Would you advise to your clients to go to the annual general meetings of companies that they're interested in investing in? What do you think, Nancy?
Well, one of the challenges with getting information is a lot of the information that you've just described comes from the institution that have a vested interest in you buying and selling stocks. So the difficulty is, if you're an analyst, if you always say, don't buy this stock, nobody's ever going to buy it. Nobody's ever going to trigger a transaction within the institution. So there has to be some influence in, you got to pay for your job as an analyst at a certain point.
That's a really good point. So they're all biased.
Yes. So what we're talking about in terms of where do we go for research, we're going into the academic schools of finance. We're going into the people who get paid big money to get peer reviewed, which means they publish this complex statistical paper, and then other institutions and other senior academics will review it and try and punch holes in it and try and explain it a different way, or look to see if they've been, adjusting the data or picking certain dates. So all these things have to be peer reviewed. They have to be very robust studies. 50 years of studies of markets, a whole bunch of Nobel Prize winners, and they've come out and said markets are very, very hard to outperform. $600 billion a day. Information from around the world is affecting that price all the time. So the only way a price changes is when there's a new piece of information, and there's no evidence that there's a reliable way to predict what that new information is going to be, because we don't know it yet, and we don't know which way that price is going to move as a result of that information.
I was not aware of that bias, and then of course I would like to hear your take on this, Rick, as someone who sort of makes a living out of this every day and teaches other people to do so. But first we have a caller on the line. Are you with us, caller?
Yes.
Thank you so much for joining us. Did you have a question?
I do. As someone who, I understand that if you're making a profit, you have to obviously declare that as income. Is there software or any kind of application that people recommend where you can track kind of what you're investing in and how much it costs, or do the websites do that for you?
Yeah, the websites will do that for you. So I have accounts with BMO InvestAlign, TD Waterhouse, and Questrade, and it's all there. You'll see your performance, whether it's a performance in that particular security, your performance over the month, the week, quarter over quarter. So it's really going to give you instant feedback. And that's one of the things about this job, about trading, being a day trader, is that you get instant feedback. When we work for a company, we wait for a quarterly review, we wait, maybe it's a semi-annually review, and we get that feedback, whether it's a raise or promotion. When you trade, you're getting instant feedback every day. Every trade you put on, good feedback or negative feedback, depending on was it successful or not. So yes, the online and self-directed brokerages give you all that information.
Are there tools that you like using, Nancy?
Well, I think when you're doing your own investing, you're certainly going to get it in the online brokerage. You're also going to get it in a robo environment. In our case, we have software we've purchased that gives us all performance reporting, and we can see what's going on. We can see the profits and losses. We help people understand what they need to report on their tax returns. We give them that information. So it's definitely a consideration. You need to report those profits for sure.
Good points. Thank you so much for calling in. So I want to go back to you, Rick. Obviously, you must disagree with Nancy in terms of the viability of the stock market. I mean, you're obviously doing well, making a living, and teaching other people how to do it. So, what are your thoughts? Obviously, it's not for the faint of heart.
No, definitely not. And I don't disagree, but there's different sectors. So there's high beta stocks, which is a stock that's going to vary from the overall S&P 500. So if the S&P 500 goes up 1 point, high beta stocks will go up significantly higher. So let's
I
just
want
say,
to interrupt you and ask you, what does it mean when you say the S&P could go up by 1 point?
So it's, the S&P, so we call it SPY, so that's the index. So it's the top 500 stocks that you're going to find on any North American exchange. So Dow Jones. Who decides
what the top 500 stocks
It'll be the top 500 market caps across the Dow Jones, NASDAQ. So that's where you're going to find Apple, Facebook.
So the top performers.
Right. So what we do in our community, and is what day traders are doing across the world, is looking for sectors that have high liquidity, which means you're going to be able to get your money in and out very quickly, and a lot of volatility. So if you
what does that mean?
Volatility means the chart looks like this. When the chart is going up, that's where the bulls are making a lot of money. So bulls want stocks to go up.
So
okay?
you actually sent us an image about bull versus bear markets,
Right.
and so it might be a good time to bring up that image, bull versus bear market. So explain that for us.
Yeah, so in a bull market, which is essentially what we've had for the past 10 years, there's a lot of optimism. The prices continue to go up. Bull markets generally last a lot longer than a bear market. I believe the average bull market is about 8 to 9 years, and the average bear market's about a year.
So we're probably exiting the bull market soon.
It could be. It's going to be up to Mr. Trump and the China tariffs. So a bear market is where, there's pessimism, prices are going to go down, but there is opportunity to the downside. As a trader, you can play both directions. So if a stock is going up, you can make money when the stock is going up. And to Nancy's picture that we saw before, when you see the greed and the buy at the top of the peak, that's what we teach people. At that point, you should be selling, and there's reasons for that. There's technical indicators that will tell you need to be fearful right now because a lot of people are greedy. So at that point, when you do sell from your bull position, you could absolutely take a bear position and participate to the downside, because you could also make money while the stock is coming down.
So another way of looking at bull versus bear is how risk averse you are?
Well, I would say if you are participating on the bear side, you have a high risk tolerance because you are betting against the overall. Yeah, you're selling short. You're betting against what everybody wants. Everybody wants the stock to continue to go up. And you're saying, no, this stock has run too much. It's going to come down, and you're taking on a contradictory position.
We have a caller on the line. Milt, are you with us?
Yes, I am. Thank you.
Thanks so much for calling in. Did you have a question for our guests?
I do, actually, and this question is for Rick. Good evening, and wonderful information from Nancy as well. Rick, I'm interested in day trading. It's something that's been I've been interested in day trading for quite some time now, and here this is a perfect opportunity. Does your company offer teaching us hands-on? I'd like to start somehow, and I've seen the books. There's plentiful books in the library, but I need to be able to actually physically see somebody do something online so I can see it myself. Do you offer that at your ffittraders.com or?
Yeah, this is exactly what we do. We cater to first-time investors, and we cater to people that are, actually, when I first started this, I thought it was going to be all for first-time investors. They really want to learn, they want to understand technical analysis, they want to participate in the market. But then I started to attract seasoned traders because they were finding that I was benefiting them from the psychology point of view. So our community, we have hundreds of members across the country, seasoned, that do this full-time, and we have people that have a full-time job that are just using our community for some, passive income, for a trip or a vacation. We are there from 9:30 to 4. Well, we're actually there 24 hours, but the stock market's open 9:30 to 4, and we're always sharing feedback and teaching and educating. What I'm trying not to do, what I don't do, is I'm not a licensed advisor where I tell people buy and I tell people sell. What I do is I promise I'll teach them technical analysis and teach them the psychology of the market, and then it's their job to be efficient.
So is there a charge that's involved? How do they join?
Yeah, we have a monthly subscription fee, which is extremely marginal. It's less than a caramel macchiato per day, so people find significant value in what we are charging.
Okay, and who are your clients? What are their demographics?
I would say our clients, we're very diverse. It's a diverse community. It's inclusive. It's across the country. We have we have people that are in retirement, we have people that just finished university, everyone that's just looking to participate in the market and make a little bit more money. And there's a lot that are trying to do this full time, and they really want to take that step to see if they have the skills, the confidence to do it, and they want to do it with a community, because having more people around you and having mentors that are going to help coach you every single day where they're available, it's gonna make you progress a lot faster.
What kind of success stories have you seen in your community?
Well, if you check out our website, you'll see some of the testimonials. You check out our Instagram page, you'll see some of the returns that our members are having. It depends on how much you're playing with, but there's opportunity for significant gains. And there's also opportunity for significant losses, and that's what we try to avoid, teaching people proper risk management, because nothing goes straight up.
We're just about to go to break, but when we come back, I want to talk about some of the trends. We hear a lot about cannabis stocks, cryptocurrency, and so on. So we'll be right back after the break. Don't go away. Welcome back to Ottawa Experts. I'm your host, Barbara Balfour, and we're talking all things investment and the stock market. Now, before we went to break, Rick was talking extensively about various stock market strategies, and I know, Nancy, you wanted to comment on that as well.
Yeah, so I understand Rick's description of the service that they're providing and the community that they're building. I just want to say that when we're investing for a purpose. We're investing for our long-term objectives. We're investing to make money over time. And so when when people who are listening to the show are thinking about investing, I want them to think about what their long-term goals are and how they're going to get there. And then I want to think about what's an evidence-based strategy to get there. And as you know, with due respect to the testimonials and the community that you've built, for my money and my clients' money and all of our clients' money, and actually this strategy that I'm talking about is now 50% of the equities market in the U.S. is invested this way. Half of the U.S. investment market is invested in a passive strategy. This is the first year they passed over 50%. So it requires consideration and making decisions around a strategy that is to outperform $600 billion a day of trades over, let's say, 30 years that you're going to, 40 years you're going to save and retire and live on those monies, requires for me and for most people I know a very long-term, evidence-based, proven to work kind of strategy. So if we can just go to that image about goals, and it explains, it kind of puts in perspective what we're trying to accomplish here.
So goals and outcomes, if we could pull that image up on the screen, goals, plans, and investments,
yes.
I believe you said it was. If we can pull that image up on the screen, we can discuss what it means, because it's important for people to understand at the outset what it is that they are investing for, right? Like it's not done blindly in the dark. So what does this diagram mean?
So what this is a way of thinking about what we're doing when we're investing. We have certain objectives or goals. We want to save for a child's education, save for our own retirement. And what we're doing is setting those goals down on a piece of paper. What do we want those to be? Then we have to develop some kind of a plan or a process, a reliable process to reach those goals. And then we have to find the investments that fit the plan, and then we go back and do it again, because it's an iterative process. But the idea is our objective for most investors, our objective is not to our objective is to get a decent return in exchange for not having to take too much of this, because I respect you have a high risk tolerance and the people that you work with do. The challenge is a lot of people think they have a high risk tolerance, then they find out they don't, and then they've done financial damage. And finding a strategy that's going to outperform that market, like there's been a ton of research done in a lot of very sophisticated environments that have no bias to wanting to find a strategy except to academically prove it, which is the magic of this, right? We don't have people who are in any way connected with making money out of trades. They're actually just getting paid to do research that other people can try and tear apart.
And those are valid points, and I think a lot of people are not really aware of that bias. I do want to hear your thoughts about that, Rick, but first we have a caller on the line. Phil, are you with us?
I am.
Thanks so much for joining us. Did you have a question for our guests?
I do. A friend of mine is a currency trader, and he wants me to maybe go in with him, but I'm not sure if I should step into that or should I go into stocks and bonds.
What do you think, Rick?
Well, he's talking about the Forex market. So this is one of the most riskiest markets that you could participate in. So if you are not a seasoned technical analysis trader, you're automatically entering one of the hardest markets to participate in.
What makes it so hard?
It's just the volatility. It's trading 24 hours. So there's a lot of risk involved. So generally I like to tell people, if you're trying to learn technical analysis, you're really trying to understand how the stock market works, you want to start, you could do paper trading. You want to start with the lower risk items. If you immediately jump into penny stocks or Forex or cryptocurrency, you could risk a lot of money.
Thank you so much for calling in, Phil. Now, we haven't really discussed this in the show yet, but let's talk about all things cannabis, marijuana stocks. I know a lot of people have made a lot of money in this industry. Is there still opportunity? What are your thoughts?
Yeah, this is what my community primarily focuses on right now. This is what I primarily focus on, the cannabis sector. And so when we talk about if markets are efficient or not, when you enter the market is very important. So understanding, are you buying at the top? October 17th is when Canada legalized cannabis, and that's when everybody decided that they wanted to buy cannabis stocks. So you were buying at the absolute peak. So Canopy Growth, which is the sector leader, was trading at about $76. It hasn't returned to that price since. So if you want to just focus on markets being efficient, you could have bought on that day and you still be down if you're holding right now. So what we try and do is in these high volatility sectors is educate people when to buy and when to sell. Cannabis still has huge opportunity in front of it because of the United States. The United States is probably going to be one of the hot items in the upcoming election, and there's a lot of U.S. companies right now that are currently trading on the CSE, which is one of our junior exchanges here in Canada, and there should be a lot of opportunity in those companies.
Nancy, I feel like you might have some strong feelings about this.
What's my body language telling you? Okay, so first of all, it's an individual stock. And the stock is being priced based on the information that's available, and the price will change when there's new information. To believe that we can anticipate when a stock is at its peak or when it's at its low, there's just no evidence that you can reliably do that. So I mean, with respect, where's the evidence for these strategies if people are actually going to engage in them with their hard-earned money?
Interesting points. Now, I want to bring up a video that I'd actually watched on your YouTube series where you talk about sustainable and responsible investing and some of the stocks that might be related to that. What are some of the things we need to know?
So sustainable investing, socially responsible investing is certainly a growing area of interest for investors. And I mean, I think it's doing well while doing good. That's the objective. So in our broad world of buying across broad markets, there certainly are now getting to be more very cost-efficient tools to buy broad swaths of stocks in these index funds or in these exchange-traded funds that have certain filters attached to them, and you can kind of shop the filters for the ones that you want. Some of them exclude the sin industries or the defense industries or whatever. Some of them actually work with companies that have a good carbon footprint. Like, they have ways of scaling them. There's a lot of work being done now to feed information in about companies, to sort them so that these various tools can buy socially responsible structures of investing.
So how do you know who's telling the truth and who's just greenwashing?
That's a tough one, and I think the industry's got a long way to go, because what is socially responsible to one person probably is not to another. So it's sort of a question of reading the material and understanding that you've come a distance. We've come a distance. We're not done. We're not there. And we will continue to evolve as an industry in getting better information about these companies.
I'd like to talk about the differences between male and female investors. Rick, do you see any difference between the male and female members of your community?
Well, the other thing I could say is I've been trading with communities for about 3-4 years now, and some of the demographic is usually about 10% is female, but what I've seen is the female traders, I don't know what it is, but they learn a lot faster. They're generally some of the better traders in the room, so I can't really say what the difference is. I can't say they're less risk adverse or more risk adverse, but the ones that I have traded with are great traders.
Now, Nancy, I know from my own research that women tend to generally be more relationship focused when they're looking for a financial advisor or to build a relationship when they are starting to invest. And you even mentioned that you shot a video on the subject today for your YouTube series. What were some of the things that you talked about?
Yeah, I think what we were talking about earlier was a stat that's recently been published that says 70 to 80% of women, when they're widowed, change their financial advisor relationship within a year. So that's a pretty high number. To me, I was quite startled by how high that number was. So what it's suggesting to me is that the woman in the relationship doesn't have the relationship with the advisor. So I think that it falls to us as an advisory community to do a better job to make sure we're connecting with both spouses. Do I see a difference? Not one that I could put on gender. I often see someone in the family who's sort of the money person in the family and the other person does other things. I've seen it both ways. Sometimes it's the woman that's sort of more financially oriented and making, those sort of leading those decisions, not making them but leading them. Sometimes it's the male. We just try and make sure we've talked to them both, heard them both when we're working with them.
So if one of our viewers out there is looking for a mentor or an advisor, for example, what are some of the qualities that they should look for? I know you provide a lot of mentorship. There's probably other organizations and communities offering mentorship as well. How do you know that you're dealing with the real deal? What should you look for?
Yeah, it depends on which avenue you're trying to take with your investing. If you're going through the day trading route, there's, you could go on YouTube. There's so many great mentors there that are providing free content. If you want to join a community, then yeah, you're going to be looking at a subscription-based fee, but you're going to have access to somebody 24 hours a day. Really, you should be asking to see the results and see and show that they've been able to return profits time over time and have some consistency.
And what do you think, Nancy?
And as an accountant, I'd say make sure those are audited results because sometimes people think they have results, but
we were talking earlier about robo-advisories, and it just kind of struck me that there are some people out there that want someone to hold their hand when the markets are going down.
Yeah, and I think that's a challenge for the robo-advisor industry. Since that industry has started to evolve, we haven't really had any significant market corrections. I think they're geared for trying to find communication channels to help people. But yeah, that's a lot of what we do as advisors. So you said, what are you looking for what should you look for when you're looking for an advisor? I think you want to make sure that you've got somebody that, has the credentials and the experience that you're looking for, somebody you can relate to and feel comfortable with and ask the dumb questions because it's your money. And what happens sometimes is we forget as an industry that we're being paid by people to look after their money, so we owe them an explanation of what we're doing, at least at some level. I would personally go looking for an advisor who would put in writing that they're acting in my best interest. So you remember my story about the analysts, and at a certain point you have to make a decision?
Yes.
A lot of the industry, unfortunately, is structured in a way where the incentives are set up that they don't have to make a decision in the customer's best interest. So I would want that in writing.
Now we have 1 minute left till the end of our show. Rick, really quickly, where can we find you? What do people need to know?
Yeah, I would suggest following us on Instagram at Fit Traders and visiting our website if you are looking to become a day trader and learn more about technical analysis.
Perfect. And Nancy, I know you've got some upcoming workshops coming up that you wanted to let our viewers know.
Yeah, so the two things I would mention is the YouTube series. Every 2 weeks we put on a new video on some topic of interest. It's 4 or 5 minutes. We make it sort of edutainment.
You have a workshop coming up?
And there's also Doris Belland is doing a women's money group, and she has regular workshops on that. It's about financial literacy for women. It's an excellent program. I recommend it. It's under Financial Launchpad.
Thank you so much to you both for joining us tonight. Our viewers are so lucky to benefit from your expertise. Thank you so much.
Thank you.
Thank you for watching. We'll see you in the studio next week. Have a great night.